what really matters is not the call on OPEC, which is how people have calculated the oil market balance for years. We don't think that matters anymore as much at all as you're implying. We look at the call on US unconventional because that's really the truly marginal short cycle oil. Now, of course, on top of that, you have the Saudis' willingness, we should say, everybody kind of has the ability to shut off production, but Saudis willing to shut off production in order to balance the market. And OPEC is really a construct for the Saudis to feel better about having to carry the market. So what they're trying to do is corral everyone else, even though in some cases, and the obvious example is Russia, what they say is more or less meaningless. Is that I won't go further than that, but it's not reliable what they say essentially, which must be very frustrating to the Saudis. But essentially, it is a Saudi construct in order for them to feel better about holding production off the market.
Paul, what is driving the oil price these days? Is it supply? Is it demand? Does one end of that equation kind of have a little bit more sway these days?
Well, Tom and I have been talking for 20 years. In fact, I'm surprised he didn't do his usual thing of hammering me for a terrible call that me and Adam Szymanski made about Russia. I think it was in the year like 2003.
That call was so bad. That call was so bad. Brezhnev aged. I'm sorry. Brezhnev aged when you made that call. Continue, Dr. Sankey.
No, I think the big thing, which is really remarkable to me in the context of that history, is that we're at all-time high oil market demand. So demand is at an all-time high. And if you'd asked me, do I think oil demand will be at 102 million barrels a day? 1,200 barrels a second in 2024? I would have thought you were crazy, but here we are. And so the demand side is truly remarkable. Now, of course, it's all about what happens at the margin, and demand is clearly weakening. So demand is good, but not growing strongly at a record high. What's additionally absolutely remarkable, and 20 years ago we would never have guessed this, was that you'd have too much supply. And so, as you know, there's arguably 4 million barrels a day of spare capacity in OPEC. And of course, we have the US as the dominant energy producer in the world. And, people still don't understand what an enormous deal that has been for everything that happens in the world, geopolitics, the dollar, you name it. The US performance here in oil and gas has been truly stunning. And the good news is that the companies have really improved themselves. They really are strong. I don't think I've seen Exxon in better shape in that 20-year period. They really are doing a remarkable job. And they're not alone. A company like Conoco, Chevron, really good stuff.
So in that context, Paul, how does the U.S. and those big producers you were just mentioning in the U.S., what's the interplay between them and OPEC in terms of shaping global oil supply?
Well, it's been controversial because obviously you saw that the FTC wouldn't allow Scott Sheffield on the board of Exxon because of concerns about that. And I think, frankly, they were simply naive. The major US CEOs at times, they didn't, we had covered refining for 20 years and I would host refining managements. They wouldn't be in the same room as each other because they didn't want to be, accused of anything by inappropriate in terms of managing the market. But of course, the E&P guys had never had any market power up to the unconventional revolution. And when we got to too much supply, they began to talk a lot to OPEC. And that at a headline level, it was actually quite innocent. But at a headline level, at an FTC level, it looks pretty bad, to be honest with you. It just doesn't look good. And so there has been some worries about that. But broadly speaking, the key issue is the behavior of the marginal US producer, who is showing capital discipline. And so US production growth has slowed and may even go into decline depending on where the oil price is. And we think that's because Saudi can't cut any more, essentially. We think that demand weakness will ultimately cause, prices that force US producers to produce less. And that's to me is the dynamic. Hence our call CUSP. The call on US unconventional is actually the important measure here, not the call on OPEC.